I am portfolio manager of the Rational Equity Armor Fund, Joe T. Gay, here for an edition of the Trading Zone. I got a quick VIX hit for you, volatility update on the morning. I'm going to be live again at noon. Remember, every Monday will be live at noon. This will be the last Monday at 10. Just quick preview. So set your calendars. Next Monday at noon will be the big show. I'll do another big show, of course, today after this quick hit here. As I am getting a spam call, unfortunately, I am not immune from those spam phone calls, even when I have my phone on silent. That's upsetting. That's the world we live in. But this is the Trading Zone. We live in a volatile world, of course. We had a big volatility event last week with the FOMC policy decision. And guess what? They did exactly what we expected. They cut rates. But what was unexpected is they said, hey, we're going to cut rates more. We're going to be very dovish. And I think the market kind of taking off on that, specifically some risk assets. Remember, we got into a Google trade 2 weeks ago. We got into an Oracle trade last week. We'll have another trade coming at you at the noon Eastern hour. Make sure you're tuned in for that. We're still waiting for this next arrow here on this VIX 2025 chart. It's been a very, turbulent year, and yet the market's still racing higher, up 12-13% in the S&P 500. While we've seen lots of volatility this year, we are absolutely expecting this to continue, to say the least. We have the MOVE index. We've been watching this very closely. Man, this thing just keeps on going lower. This is helping stocks go higher. The lower the volatility in the bonds, the higher the PE ratio tends to be in stocks. And this is just good news for bulls. If you're seeing this, the party can continue. Here is the skew index. We're kind of stuck in this range. We're on the lower end of the range for volatility. Now, just because stocks are going higher does not necessarily mean the VIX has to go lower. I mean, especially when the VIX is at a relative low, we could see a situation where we have stocks going higher and volatility going higher, and it could happen for an extended period of time. I'm thinking back to 1995 through 1998, that period of time, I want to talk about at noon with you all, where we saw the Fed cutting rates. We had a strong economy. We had a technological boom. And it's very similar to what we're seeing now. And boy, we could be in store for a big upside in stocks. So people are talking about the bubble right now. It's really big right now. Well, if you look at 1995 to 98 and 2000, you'll see that it can get a lot bigger. Elsewhere in the volatility world, of course, we are now having the front month being October for the VIX future. So you see a completely different look to the chart right now for the VIX future, much flatter. This red line is our current. This is much flatter than where we've been. Of course, last week we had very flat front and spot because we were expiring in a couple of days. But right now we have a flat futures curve. We have October, November, December right here. So maybe people are taking some volatility out of the future given what the Fed has said. We'll see if that turns out to be right, but certainly there's a lot more risk now to the upside in the VIX because we do not have that big premium where the futures are pricing in. So anyways, that's all I have for right this very second. Make sure to tune in at noon. We'll be talking about the parallels to when the Fed cut rates in the 90s, the mid 90s, the second time they cut rates in the 90s after the recession, the parallels with the .com boom and the AI boom, and we'll be looking at a trade at the end of it. So make sure you stick around. Shoot me up. Ask any questions you got. Hit me up. I'm here. I'm here for you. If you got any thoughts you want to talk, let me know, and I will see you at noon.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.